Good morning. This is Bloomberg Daybreak Europe. I'm Jumana Bersachi, and these are the stories that set your agenda. Resetting relations. President Xi Jinping takes center stage as he hosts Russia's Vladimir Putin and Indian leader Narendra Modi in China. Trump's tariffs hit legal limbo as a U.S. court rules against them, but they'll stay in place while the administration weighs its next steps. Plus, François Bayrou strikes a combative tone as he battles to survive as French Prime Minister. Opposition parties talk down the prospects for their support. Good morning, everybody. If you're just waking up, welcome to Daybreak Europe. It is a bank holiday today in the U.S., so markets will be, not trading closed as of now. Thin liquidity in futures, too. But you can see the read across to U.S. futures when they do open again is slightly negative. We had a pullback for Wall Street on Friday, but heading into a really crucial couple of weeks in terms of data. Remember, NFP comes out on Friday. The week after, you have CPI and you have the Fed meeting where they're anticipated to cut. So all of those coming up. European markets, a little bit of green this morning, leaning towards positive, up 10 basis points. Though I should just point out, for the week last week, European markets ended down considerably negative, down 2.5%, mainly on back of concerns around France, that confidence vote that is coming up, that is expected once again to topple the government. So we're keeping a close eye on France, and we will be talking about that on this show, too. Switching over, though, to other assets that we're watching this morning, keeping close tabs on the USD, given some of the major events that are happening in terms of data the next few days. Also, don't forget, ISM is a big one tomorrow, too, for further signs on the health of the U.S. economy. USD trading sideways, but the theme has been one of a loss and a negative return for the month of August, once again, for the greenback. Gold also in focus, up 0.8%. But take a look at silver. We are up 1.9% this morning. So gold's cousin, if you will, doing quite well on this rally, too, breaking through $40 per ounce for the first time since 2011. So beginning to participate and enjoy some of that flight to quality, safe haven status, and the fact that perhaps investors are positioning for an uptick in inflation further on in the year. That's driving some of the performance in gold and silver today. And then Brent also in focus. Energy slipping a little bit this morning, down 0.4% as we think about another monthly loss, I should say, for the energy complex, and heading into that virtual OPEC meeting this next weekend. Perhaps more supply could be coming to the market in Q4. And on to our top story from the weekend. Chinese President Xi Jinping says the Shanghai Cooperation Organization is taking on greater responsibility in driving shared development as global uncertainty continues to rise. Xi made the remarks as he welcomed international leaders, including India's Narendra Modi and Russia's Vladimir Putin, to the summit in Tianjin.
We should seek common ground while putting aside differences. Shared aspirations are the source of strength and advantage, and the will to seek commonality while shelving differences reflects wisdom and vision.
Bloomberg's Min Lo is in Tianjin for us. It must be quite buzzy to be there on the ground, Min. Maybe let's just start off by talking about what's on slate for today. What are we watching out for? I believe there's quite a high-profile bilateral meeting taking place between Modi and Putin that people are going to be watching out for, I think.
That's right. It's day 2 of the SCO summit, and there is a whole slew of bilateral meetings happening on the sideline. But you heard President Xi earlier giving a speech where he called the countries to oppose this Cold War mentality and the bullying practices of certain countries. He didn't name drop the United States, but clearly it's a veiled swipe at the U.S. He also talked about the growing influence of the SCO. He talked about pledging more investments and loans to this grouping, increasing academic exchanges through the SCO scholarship, and creating this SCO development bank. But really, this is a platform for China to showcase its global leadership over countries of the global south. And when it comes to the bilateral meetings, as you said, today there will be an important one we're watching between Putin and Modi. Tomorrow, Putin will be meeting with President Xi as well. This is his first trip to China since the Alaska meeting with President Trump. So it's his opportunity to brief both Modi and Xi about what went down during that meeting, what are his plans towards a ceasefire that could possibly appease President Trump. And he will likely want to convince these two of his biggest clients of crude oil to continue to purchase oil and to keep those revenue flowing into Russia, despite the tariffs that the U.S. has imposed on India.
And it's not just, of course, Modi, Putin, but over the weekend we saw that really high-profile meeting between President Xi and the Indian Prime Minister Modi as well. The first time that Modi pays a visit to China in 7 years. What did we learn from that meeting?
Yes, President Modi announced that the two sides will be resuming direct flights at some point. But look, this is something that both countries have been pledging to resume since the start of this year, since January, and progress has been slow. But there has been signs that both sides are looking towards normalization of ties. Certainly, China has been courting India and really taking advantage of this diplomatic opening that President Trump has handed to Xi by imposing more tariffs on India. And so India is sort of hedging its risk, tilting more towards other partners in the region. But Modi also has a very fine balancing act to juggle here, because he will be one of the leaders that will be notably absent in the military parade a couple of days from now. He will not be standing alongside President Putin, President Xi and Kim Jong-un. Clearly not a good look for him optics-wise, given that India prides itself as one of the world's largest democracies. He wouldn't look good standing alongside some of these autocratic leaders. So yes, Modi here to hedge against the souring of relations with US, but at the same time, he's not exactly diving deep into the embrace of China as well. But still, the tone out of this meeting really quite positive, markedly different from what we heard a few years ago during the deadly border clashes. One of the favorite phrases that China has been using to describe the relationship is one of the dragon and the elephant tangoing together.
Dragon and elephant tangoing together. What an image. Okay, Bloomberg's Min Lo in Tianjin on the ground for us. Thank you so much. Turning to tariffs, U.S. trade partners have been left confused after President Trump's global tariffs were found to be illegal by a U.S. appeals court on Friday. For more, I'm joined by Balazs Pence, Bloomberg News managing editor for Eastern Europe. So quite simply, Balazs, where does the appeal court loss leave these tariffs?
Well, they're staying in place for now, Jumana, even though the court said that President Trump was wrong to invoke economic emergency powers to impose them. It said that the tariffs can stay in place while the case works its way through court. So now we have a lot of open questions. The court also said that the lower court needs to review the scope of this decision, what it applies to. And they will also need to see how the Trump administration reacts to this. So a lot of questions remain, not the least what this means for companies and countries trying to plan ahead in this time of very volatile trade environments. And what happens if the ruling stands and if the tariffs are ruled illegal, what happens to the tariffs already collected, and what happens to all those trade deals that the U.S. has struck over the past few months?
So where exactly does the case go from here? Because I'm sure there are many trading counterparts around the world who are watching to see what happens from a legal perspective. By the way, not the only legal case that the world is watching out for right now as it pertains to the Trump administration. What are the key signposts we should be watching out for in the coming weeks, months?
Yeah, that's right. It adds another layer of complexity to what is an already incredibly complex trade environment for the entire world. The Trump administration has a few options in front of it. It can wait for the trade court to make its decision over the scope of this ruling. It can immediately appeal to the Supreme Court and hope that a string of favorable decisions will continue over trade as well. Or, as we have heard from some of our sources, it can start working on alternative ways to introduce these tariffs, not using economic emergency powers, but use other parts of the legal system to put them through. So there are a number of options, and right now it's still unclear, and everybody will be watching very closely which way this goes.
Balazs Pence, Bloomberg News managing editor for Eastern Europe, thank you so much. Certainly a big issue as we think about some of the drivers for stocks over the next couple of weeks. Now, let's pivot a little bit and talk about Asian equities, which have come under a little bit of pressure after a tech sell-off hit Wall Street on Friday, with chip shares amongst the losers. However, Hong Kong is an outlier this morning, with Alibaba surging as much as 19% after reporting a surge in AI revenues. We're joined now by Paul Dobson, our Asia Markets Executive Editor. Well, on Friday, we were doing a preview of Alibaba and talking about the significance of this stock. Well, clearly quite significant. Huge rally this morning. The stock up almost 20% in trading. Does this really speak to perhaps a two-speed Chinese economy where you've got AI powering ahead and perhaps the e-retailers, the e-commerce businesses struggling a bit?
Interesting question and a good point. And I do think that there's some rationale behind that. Yes, the Chinese AI narrative has been running through the market all year long and giving everything a boost. And those companies that stand to benefit the most from China's push for more independence in that space, as well as the kind of prod from the US, which has a similar effect, are doing well and are benefiting. And for Alibaba, you see it from the cloud revenue and you see it from the future and forward-looking prospects today. And I think that, that's given Alibaba that real confidence to take that competition in the delivery space, for example, the platform-based business, to its competitors. And while, Meituan had really awful-looking earnings and fell a lot last week as a result, Alibaba, on the other hand, is managing to ride that out and come out on the upside as well. So it's a little bit of a kind of one versus the other there. But in general, when you look at the Chinese markets, whether it's in Hong Kong or on the mainland, they continue to do very well. They continue to fare well despite a lot of negative economic news, disappointment that we've seen. The property market remains under pressure. Not all the earnings were very good this season. And yet, because of the force from those sort of new economy areas, we're still continuing to see outperformance, and that's putting more and more money off the sideline and leading to a sort of benevolent cycle in some ways.
Yeah, interesting. Well, let's pivot back to U.S. markets. Obviously, it is a holiday today, Labor Day, for U.S. viewers. But the data is going to come thick and fast over the next week. And I would say Friday probably is a crucial one with Jobs Day. What are we watching out for?
Yeah, well, it's one of those weeks for us, Jemana, where the most important data point for the whole week comes after Asia's already gone home for the week. So it's going to be lots of holding the breath and waiting for that. I think that the one thing that could disrupt, the Fed from its decision to cut interest rates would be a very big surprise in the labour market. Or maybe that could also, if it was a huge disappointment, could force the Fed to act a little bit more aggressively. It feels like a lot of the Fed policymakers have made up their mind now that we'll get going with some more cuts starting in September. If the job market suddenly came with a very big upward surprise, that would jolt that a little bit, because it's partly the labour side of the equation that is forcing people to think in this way, the big downward revisions that we saw in the last set of numbers. So that one is going to be really important for everybody to be keeping an eye out for, just because of what it will mean for the Fed decision-making process, and not just for September, but what's priced in for the rest of the year as well. I mean, right now, interest rates are low. We saw the two-year note had its sort of biggest rally in a year over the last month. And so people really pricing in a more aggressive Fed, and that's reflected also in upside in the equity space as well. So we're looking for follow-through from that, and the next couple of weeks and the data that we see culminating in that Fed decision are really going to be pivotal for us.
Yeah, it does feel there's going to be, it will take a really strong upward surprise to shift the Fed away from that September rate cut. 22 basis points priced in now for September. Paul Dobson, our Asian Markets Executive Editor, thank you so much. Well, that's happening on Friday, the jobs data. But a week ahead, just taking a look at some of the other data points to watch out for. Tomorrow, we're going to get euro area inflation. Remember, on Friday, we had a series of national inflation numbers drop. We had Spain, we had France, and also Germany, which, by the way, surprised a little bit to the upside in August, the reading coming in at 2.1%. So that's a taster of what you could get tomorrow, with some of these inflation numbers beginning to creep up again in Europe. Wednesday is a big one. In China, you've got the military parade. We were talking about this last week. Kim Jong-un is going to be attending. So keep an eye out on the geopolitical developments coming out of China, in addition to some of the takeaways from the Tianjin summit, which is still going on right now, by the way. And then Friday, of course, we round up the week with those August jobs report figures, and will be key for direction and also for the Fed to determine the health of the U.S. labor market right now. And you can get a roundup of all the stories you need to know to get your day going today. In today's edition of Daybreak, terminal subscribers can go to dayb.go, so D-A-Y-B, go on the terminal. And coming up, the Prime Minister of Yemen's Houthi government is killed in Israeli airstrikes. We'll have the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Well, some breaking news for you. OpenAI planning to open up a data center in India in a part of the Stargate expansion. They are looking to build a new data center that could have an approximate capacity of at least 1 gigawatt. And the site could be amongst the largest in India, where obviously other tech giants, including Microsoft, Alphabet, and Google, all operate. And of course, this is still part of the Stargate project, which is the signature project in the U.S., which will have about 4.5 gigawatts of capacity in a venture that is really being lauded by the President Donald Trump. And now this just shows you that they're looking to expand further into other geographies, including in India as well. So some breaking news out of OpenAI with their plans to launch a data center in India. India in the news a lot the last couple of days. Now, the Prime Minister of Yemen's Houthi government was killed in Israeli strikes on Thursday, along with a number of ministers. According to a statement from the group, Ahmed Ghalib al-Rahwi and his members of his cabinet were targeted during a routine workshop held by the government. Now, let's get more with Dana Khresh, Bloomberg's UAE bureau chief. How significant is the killing of the Houthi Prime Minister, other members of his cabinet as well? Will it deter Houthis from further strikes?
It is quite significant. This is the first high-level political officials that have been assassinated by Israel. This will definitely impact morale, but I doubt that it would deter the Houthis. Actually, we saw from the UK Navy saying there was a reported explosion near a ship in the Red Sea. That was last night. So these strikes are continuing as the Houthis won't be deterred. And they said they won't stop until the war in Gaza ends. And of course, it's a message for Abdul Malik al-Houthi, the head of the group, who was at the time of the strike on Thursday that killed the prime minister, was actually delivering a televised speech. So that's a very strong message from Israel to him that he could be the next target too.
Yeah, and the military offensive, Israel's military offensive in Gaza, specifically in Gaza City, continues to intensify. Reports over the weekend that a key Hamas spokesperson was also killed as well. Is that also a significant development?
Indeed. Abu Ubaidah, as he's known, is quite a significant figure for Hamas. He is an icon, like an idol for Hamas supporters and others, of course, around the region. But really, I mean, he would deliver these messages of boosting morale of Hamas fighters. He would go on these diatribes against Israel, warning Israel. And last week, he actually delivered a pre-taped video, as he would do, with covering his face, with the Palestinian kufi only showing his eyes, in military fatigue usually. And he delivered the message warning Israel against coming into Gaza City and saying that the fate of the hostages would be the same as Hamas fighters. So he is the one always delivering this kind of very strong rhetoric against Israel. And now he's been assassinated. We are still waiting for Hamas's confirmation of that. But this is, of course, against the backdrop of Israel's planned seizure of Gaza City, wanting to empty Gaza City of the million Palestinians there. And this is part of the escalating campaign to start doing that.
Dana, thank you so much. Dana Khresh, our UAE bureau chief. Now, coming up, can the wind industry survive the storm clouds of Donald Trump's administration? We'll look at the outlook for the sector. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. After years of rising interest rates and strained supply chains set back the wind industry, it's now facing growing political turmoil, especially in the U.S. Donald Trump has a deep dislike of wind farms, and his administration has moved aggressively to restrict their construction. That's made life difficult for some of the biggest developers, including Denmark's Ørsted. Ali Metcalf, head of wind research at BNEF, joins us now. A lot is going on in the wind industry. Maybe let's just start with Ørsted. It was so much in the news last week. Can the company bounce back? And are other companies facing the same risks that Ørsted was facing politically when it comes to the Trump administration?
Well, yeah, Ørsted's been hit by a double shock in the US. First, it ran into issues trying to sell down its stake in its Sunrise Wind project. And that's due to some of the political turmoil it's been facing, some of the uncertainty, both around tariffs, but also a stop work order that was put on a different offshore wind farm. But it really raised the perceived risk for investors and financiers in the US for offshore wind projects. After that, Ørsted was hit by its own stop work order on its Revolution project that will feed power into Rhode Island and Connecticut. And that will really be a big financial impact for the company. Every week that the project has to stop means weeks of vessel fees, port fees, crew costs that will really raise costs for the company. That means that last week the company's share price hit an all-time low. Now, it's not just a question around Ørsted, but other companies in the US sector are also facing some of these difficulties. Costs have increased significantly for US offshore wind developers over the last few years. And that means that other developers out there, companies like Equinor, EDF and BP, they've taken large impairments on their assets out there, and they'll really struggle to find a buyer if they're looking to exit the sector out in the US.
Okay, so you paint a pretty bleak picture, so many negative headlines. Can the sector still grow with all of these headwinds?
Well, the sector's facing a lot of headwinds in the US, but we're actually predicting a lot of growth for the sector outside of the market. So next year, we're expecting offshore wind installations outside of China to rise to 10 gigawatts for the first time. Now, a gigawatt of power is around the same amount of power that you could expect from a large combined cycle gas generator. And so that's a new step up in scale for the offshore wind sector outside of China. Now, we're expecting the sector to continue its momentum there. So average installations from 2020 to 2024 were around 4 gigawatts. We're expecting average installations to triple that from 2027 to 2030. And we're expecting to see a globalization of the sector as well. So we're expecting to see more installations in markets like South Korea and newer markets like Poland as the decade progresses. Now, having said that, globally, the offshore wind sector has faced significant cost increases. So by our modelling, the cost of delivering an offshore wind project has increased by around 40% from 2021 to 2024. So that means developers are hyper-focused on project delivery rather than expanding their pipelines at all costs. So it means that governments around the world are going to have to really raise the attractiveness of the offers that they're making in terms of subsidies for offshore wind developers if they're going to attract interest from the investors that remain interested in expanding their pipelines in the space.
Yeah, so operational efficiency over expansion. Ali Metcalf, head of wind research at BloombergNEF, thank you so much. Well, shares in Chinese EV leader BYD have fallen after it reported a 30% plunge in quarterly profit on Friday. Despite robust overseas sales, BYD's net income for the 3 months through to June the 30th fell short of analyst estimates for a modest increase. Heavy discounting saw BYD's gross margin contract as a fierce battle amongst Chinese car makers hits its bottom line. And coming up, France's prime minister admits he may fail to reach a compromise ahead of a confidence vote next week. We'll discuss the latest with Anne-Laure Kiechel, the CEO of Global Sovereign Advisory, next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Joanna Bersecci, and these are the stories that set your agenda. Resetting relations. President Xi Jinping takes center stage as he hosts Russia's Vladimir Putin and Indian leader Narendra Modi in China. Trump's tariffs hit legal limbo as a U.S. court rules against them, but they will stay in place while the administration weighs its next steps. Plus, François Bayrou strikes a combative tone as he battles to survive as French Prime Minister. Opposition parties talk down the prospects for their support. And a check on markets. Remember, it is a U.S. bank holiday today, Labor Day, so thin liquidity for these U.S. futures. U.S. markets, anyway, leaning towards the red after a pullback on Friday. And there we saw a bit of a decline in chip makers after Dell reported some concerns around the sale of parts of its AI-related business. And so on the back of that, you saw a bit of a repricing on Wall Street, but of course very close to those all-time highs. As we head into a very crucial week in terms of data, Friday non-farm. The week afterwards, we have the September potential rate cut out of the Fed, in addition to inflation data. So all of that coming up. European markets, you can see, though, leaning towards the green after a big pullback last week. European markets ended this session, or the week, this last week, down 2.5%. Focus there on developments in France. Switching over, though, to other assets that we're watching, the dollar isn't doing a whole lot today. We are basically trading sideways, but for the month of August, it was a month of weakness for the greenback. Gold also up 0.9%. But then take a look at silver. I wanted to flag this morning. It's up 1.8%, benefiting from this flight to quality, safe haven. Perhaps people are positioning for a potential uptick in inflation in the fourth quarter of this year. But silver has broken through $40 an ounce for the first time since 2011. So that's notable. And then Brent, take a look. We are slightly weaker today, down 0.4%. Again, another down month for oil as we head into Q4, with many analysts out there saying that we are due for a supply glut and that the supply picture is going to dominate demand. So that is one of the reasons that the market is largely bearish, I would say, the energy complex going into the fourth quarter. But we started off this segment talking about Europe and the pullback that we had in equities last week. Let's get more on the political turmoil in France. The Prime Minister, François Bayrou, has told reporters he wasn't sure a compromise would be possible in talks with opposition parties this week. Those remarks coming a week before legislators hold a confidence vote in the government. For analysis, I'm joined now by Anne-Laure Kiechel, the CEO of GSA, an independent firm providing advice on public policy matters. Anne-Laure, really good to talk to you. Let's talk about all the developments in France and how you're thinking about it as a sovereign debt expert. We started to see the widening out of those French spreads versus bonds. We're close to 80 basis points. Do you think the market at this level is priced for not just the dissolution of the government, but a potential for a new round of parliamentary elections as well?
Yeah, good morning. Look, it's a very interesting question because we have various items that come into the equation. Indeed, the market hates the turmoil, so hate uncertainty, so this goes into the bad direction. On another hand, as you hinted, the spread between France and Germany is close to all-time high. But at the same time, the question that you really want to ask yourself is it kind of like the top of what it can reach, or is it going to be coming higher even? Because the question is less, in fact, the turmoil, or also maybe the fact that we will have snap elections, because the odds are still out. It's much more, honestly, what is the plan for France? And I think the market is still not asking this question, much more looking into the short term, not that much looking into the long term. Though the entire question is when the market is going to question the long term, the growth, and how France can kind of like continue to decrease its deficit, that's where the hard things potentially are going to come.
Yeah. So if we think to the catalyst of all of this, the catalyst is that the Prime Minister and his government are trying to push through fiscal consolidation, a budget consolidation plan, and what he's proposing hasn't gone down well. That's ultimately how we got to this point. So if this government fails, what happens to France's fiscal consolidation plans? We're still looking at a budget deficit of around 5%.
Yeah, absolutely right. So we're a little bit where we were 1 year ago, which is a little bit quite extraordinary, right? Because last year we were exactly in the same situation with a prime minister that was already trying to fix some deficit and trying to put some austerity into the budget. 1 year later, we're exactly around the same matter, with a 44 billion decrease that is being heavily disputed by, indeed, the parliament. So I think it's less, in fact, the fact that we're talking 40, 44, or in fact, whatever the number, I really believe. It's much more who is bearing the effort of this number that we have to put in. Because I think altogether, everybody agrees, irrespective of the political party, that something needs to be done with regards to French debt and with regards to French deficit. At the end of the day, France is part of the excess deficit procedure in Brussels, right? So it has to do something. It committed also to do something. It's much more about the method. It's much more about the pace. Some political parties have disputed the fact that the target was 2029 and are trying to push it. So it's really method and pace. So letting pace aside, the method is really where it's being very difficult and heavily debated, because it's all about who is going to take the burden of the effort. And then it becomes, I mean, are there the pensioners? Are there the people who work? Are there the richer? Are there, and that's what's going on, basically. And it's happening in a country which has seen, in a way, more poverty coming on, so that makes every decision or every cut, in particular in the social system, extremely difficult. So to your question,
I mean, this is a question I think many politicians are asking right now. Many politicians are dealing with the same issue. I mean, you don't have to go that far in the UK. Similar debate playing out. But I do want to ask you one question, because people keep talking about 10-year France versus 10-year Italy, making that comparison. And as of now, you know, the 10-year Italy BTP is about 6-7 basis points higher than France. The reason I bring it up is it possible for us to see a situation where French spreads blow out, but other spreads, the periphery spreads in the Eurozone, actually remain contained? Or do you see a potential for this to broaden out and for a broader spread widening to occur in tandem with France?
I don't see a broader widening in Europe. I see specific widening, and in particular, indeed, in France, it can happen. It will, however, happen temporarily. I don't believe this is kind of like a trend that will last. But can we see the reverse with France and Italy, as you just mentioned? Yes, we can. I mean, France can be above Italy. I believe that's completely possible. And the reason for this is that, indeed, there are uncertainty and there are questions about France, while in Italy, despite everybody knowing the weight of Italian debt, but people have the feeling that Italy is taking the right political decision. It also has performed economically quite well on its exports, on many indicators that are good. So it's looking altogether to the economic situation on France and being worried about France. So I think we could see extraordinary situation whereby, while Italy is BBB rated, right, and France is still AA, but we could still have this very bizarre situation, which between us should make everybody buy some French debt, right? Because when you have a debt that is also, because you mentioned Italy, we could also mention Greece, or we could mention Spain or Portugal, right? So when you look into the relative value, when you look into the rating, the French debt is looking extremely attractive. Yet, it's not sure that it has actually gone to the end of the increase of spread, and potentially there could be more, so which is kind of like creating a very particular and bizarre situation. But I don't believe it will result into Eurozone just kind of like blowing, I mean, in the sense of increasing. I think it's much more of a French phenomenon.
Yeah, so interesting. And I was reading over the weekend that some French corporate bonds are actually trading tighter than the sovereigns. So lots of these interesting dynamics are opening up right now. Anne-Laure Kiechel, Chief Executive of Global Sovereign Advisory. Always a pleasure to talk to you. Thank you so much for coming on the show. Now, the German Chancellor, Friedrich Merz, has warned that he sees the war in Ukraine dragging on with no clear end in sight. Speaking on German television, Merz said he has not given up hope that a ceasefire can be secured, but he says he's not under any illusions either. Bloomberg's Greg Sullivan is here. Let's talk about the assessment from the German Chancellor. Pretty negative.
Yes, it is pretty negative, but also potentially clear-eyed. We've seen successive rounds of negotiations between the two sides, and they've largely just produced prisoner swaps. Putin has stuck to maximalist demands and hasn't backed down, and the Kremlin really hasn't shown an indication that they want this conflict to end or that they're even willing to do a ceasefire. Meanwhile, Ukraine, they see this as an existential fight, so they're very unlikely to lay down their weapons. With neither side able to gain a military advantage, it does look like the conflict is mired in sort of a stalemate and no end in sight. Yeah. So kind of a clear-eyed assessment.
Yeah, I remember you and I were discussing this around the time that last Damascus summit, sort of the rehabilitation of Vladimir Putin on the global stage. And now he's in Shanghai. He's meeting with all of these other leaders around the world. President Xi later going to be meeting with President Modi. So that really just speaks to the elevation that he's received around the world in the last month. But at the same time, the Europeans are still pressing ahead and saying that more secondary sanctions need to be applied on Russia. We heard this from Macron and Merz over the weekend. Could we expect more action to that effect on sanctions out of Europe?
Well, it is interesting. Historically, Europe has been somewhat reluctant on the secondary sanctions, but in some ways this is an admission that the direct sanctions on Russia have reached the limits of what they can do.
Right.
They're not a very powerful lever on Putin. Obviously, the conflict continues. But if you dig a little deeper, it's also an attempt to prod the U.S. to back them in secondary sanctions and to take more actions. Donald Trump has said that he is willing to impose sanctions on Russia, but he's largely been reluctant to and has not imposed any kind of punitive measures onto Putin. So they're also trying to get the U.S. to step up to the plate and put pressure on Russia to finally end this conflict or at least come to a stalemate.
Yeah, the irony is these secondary sanctions were actually 25% extra tariffs applied on India, which is, Russia's one of Russia's largest buyers. So there you have it. It's not going directly to Russia, but on the countries that buy Russian oil. Greg Sullivan, our Russia economy and government editor, thank you. Now to some other stories making the news. Indonesian stocks tumbled by the most in nearly 5 months, hit by growing concerns over political instability in Southeast Asia's biggest market. President Prabowo Subianto canceled a trip to China following the deadly unrest as demonstrators targeted the homes of Indonesia's finance minister and several lawmakers. On Sunday, Prabowo announced that Parliament will remove hefty lawmaker perks that had been a source of ire for many protesters. And the Trump administration is proposing strict new visa limits for Chinese journalists in the U.S., limiting their stay to just 90 days. The proposal includes new restrictions for students and exchange visitors, with their stays limited to a maximum of 4 years. The move comes amid a broader immigration crackdown from the U.S., which has seen Washington set up visa revocations. New Zealand is to loosen its ban on foreigners buying houses, opening the door for wealthy investors to purchase luxury properties as part of a push to revive its sluggish economy. The coalition government says it will allow holders of so-called golden visas to buy houses worth at least $3 million. The change carves out an exemption to restrictions that have largely kept overseas buyers out of the market since 2018. And coming up, Parliament returns from recess in the UK, and Prime Minister Keir Starmer has a long list of issues to deal with as his party's popularity wanes. We'll look at the challenges next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The UK Parliament returns from its summer recess today. Prime Minister Keir Starmer faces multiple domestic challenges on different fronts, with his party trailing in opinion polls. For more, let's go to Bloomberg's Alex Morgan in London. Alex, good to have you with us. On Friday, we were speaking to James Woolcock, and he was talking about the fact that the Reform Party have just been charging ahead in the polls. How is that influencing Labour and the Labour Party's own popularity with voters right now?
Well, good morning, Jemana. Yeah, it's got the first day of school vibes. New term, same challenges, I think it's fair to say, for the government lingering. Let's have a look at those opinion polls you were just mentioning there. This is the Bloomberg look across the polling companies, and it sort of puts the Reform Party, that's Nigel Farage's right-wing party, on around 28% of the vote. There you go. You can see the line there. It's the light blue line at the top. Now, concerning for the Labour Party, the red line below, the governing Labour Party, as they sit on around 20%. Now, the Conservatives have dropped to around 18%. The real challenge for them is finding space, I think it's fair to say, as Nigel Farage sort of cannibalises a lot of their territory. And then you've got underneath that the Liberal Democrats, the orange line, on around 14%. Now, it's worth saying Reform have set the political weather on the domestic front over the summer. I do think that's fair to say. Nigel Farage giving a number of press conferences, including a rather major announcement where he was talking about mass deportations, many people saying mirroring the language of the US president, at a time when the Prime Minister has been focused on the international stage. He's been, of course, in the White House with other European leaders alongside Vladimir Zelensky, with the focus on the Ukraine conflict. Now, for the Labour Party, as their popularity is dipping, the challenge will be the home front? How can they address voter concerns about immigration and asylum, something that's a key issue for reform, but also living costs and people's take-home pay?
Yeah, all of those questions need to be addressed at the autumn budget. But let me just turn your attention back to the economy. The Bank of England have cut interest rates 3 times this year. And yet, if you go back and take a look at what's been happening to UK inflation, it's moving in the wrong direction. We're started moving upwards, very close to 4%. Numbers are sitting at 3.8%. That really complicates the challenge of perhaps providing an extra boost to the economy because inflation still remains too high in the UK right now.
Well, you're mentioning there, that 3.8% climb in the year to July, that really is something, of course, that is concerning. The Bank of England seeing overall expecting inflation to peak around 4%. That's, of course, double their 2% target. All of this is coming as a backdrop at the time when the government, and to quote Keir Starmer, is looking to, quote, be very much focused on living standards and making sure people feel better off. Well, the challenge, of course, as you've just mentioned there, is with these broader challenges, how does the government do that? We can talk in rather abstract terms about these numbers, about CPI, about inflationary targets, but for people out there talking about the opinion polls, what's driving their concerns? Is this feeling that they are not as well off as they ought to be? They're not being heard, and there is that real frustration, a palpable frustration, I think, out there in the country. So Keir Starmer has defended the government's stewardship of the economy over the summer, saying that under their watch, wages have risen and they've seen a number of interest rate cuts. But the broader picture, as we look ahead to that autumn budget, is the question of Rachel Reeves' fiscal headroom, whether she's going to be able to meet her fiscal targets. And an estimated £51 billion black hole is looming for the Chancellor. So difficult decisions on the horizon. At the same time, the government, as Keir Starmer was saying, is really trying to make sure ordinary people are feeling some sort of economic benefit. I mean, it is a very complicated, knotty situation there.
Yeah, it is, most indeed. Alex Morgan in London, thank you for breaking it down for us. And you say, back to work, back to school vibes today, everywhere, all around the world. Now, Norway has picked the UK to supply frigates for its navy in a £10 billion deal, the Nordic nation's biggest ever investment in its defence. Amongst the NATO members that border Russia, Norway had also considered France, Germany and the US for the contract. Delivery of the British Type 26 frigates, specifically designed to detect, track down and combat submarines, will start in 2030. Now, the European Union's Commission President Ursula von der Leyen says the bloc's plan to accelerate investment in its defence industry will benefit Poland the most. The Commission will prepare a roadmap for investing additional defence funds in coming weeks and will discuss it with national governments in October. Joining me now is Suzanne Lynch, Bloomberg's Brussels bureau chief. Suzanne, good to have you with us. Let's start with this plan to increase defence spending. We know that NATO countries had committed to that 5% defence spending target. How is this likely to play out in Europe in the coming months?
Yes, this announcement was made by Ursula von der Leyen, the head of the European Commission, as part of a tour of 7 European states that are closest to the front line where that war is continuing in Ukraine. So it was very much a show of solidarity by the EU to show these frontline countries that they're behind them and that they are continuing to commit to Ukraine's security and support. So as you said there, Poland, she visited on Sunday, and Poland looks set to claim the lion's share of a new programme announced by the European Commission earlier this year that seeks to raise it's €150 billion worth of loans for defence, and countries can apply for these loans at favourable rates and then use that money to enhance their own defence capabilities. With the idea that European countries could coordinate more on the capabilities that they need. So this is very much, as we start the season here in Brussels today, a sense of the importance of Ukraine and defence as the European Union officials get back to their desks here in Brussels.
Suzanne Lynch, our Brussels bureau chief. And just a housekeeping note, Suzanne, really good to have you with us. You also will be taking the lead as our Brussels newsletter gets a fresh look. So make sure you do sign up for that at bloomberg.com/newsletters. Such an interesting time in Europe. So much going on there on the political side of things, geopolitical, fiscal concerns too. All of that will be in the Brussels edition newsletter with Suzanne Lynch. So sign up for it. It's up there on your screens right now. And plenty more coming up on Daybreak. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
This is going to get Wall Street's attention.
They're not going out and hiring a ton, but they're also not firing. So basically, you have a frozen labor market.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
Financial conditions versus economic conditions. There's a key distinction to make.
And that really is the key question for policy going forward.
The August Jobs Report. Friday on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Let's take a look at some of the charts that caught my attention this morning. We started out the show taking a look at oil, which has been trading slightly weaker today, down about 0.4% for the month of August. Another monthly loss as we head into the fourth quarter. People are concerned about the real possibility of a supply glut with all of this extra production hitting the market, in addition to some global demand concerns. But take a look at this positioning. Hedge funds cut their net longs to an 18-year low. So really, you're talking about very, very trim positioning in terms of accounts positioning for upside in the oil market here. People are very bearish on the outlook for oil. So think about that as we head into the next couple of weeks. Flipping over, I also wanted to flag to you, as we head into jobs data, it's going to be a crucial figure coming up on Friday, and really cemented the case for a September rate cut, with the Fed Chair Jerome Powell changing his tone at Jackson Hole. But just a reminder, the revisions were so key last month. We had downward revisions of around cumulative 258,000. You have to go all the way back beyond COVID, obviously decades, to get a revision of this magnitude. So this print in particular, a lot of focus is going to be on, and whether we get a similar move in terms of downward revisions to prior data. And then finally, taking a look today at China GDP estimates versus U.S. GDP. Interesting with the Tianjin summit that's going on with some of the big leaders around the world there, Modi, Putin. But also interesting to note that while U.S. forecasts have sort of been trimmed over the last couple of months, people turning slightly more bearish on the status of the U.S. economy, not the case for China, where actually you've started to see some upgrades to the GDP forecast come through on back of perhaps policy announcements, some easing, the fact that the data on the ground is looking better, but interesting to know. And Bloomberg Terminal users can access these charts and others used throughout the show on the GTV Go on the Bloomberg Terminal. So that's it for our charts, and that is it for Daybreak Europe. The opening trade is coming up next. This is Bloomberg.